Hello guys, thank you for joining me. My name is Roy Machingura and welcome, a very warm welcome to this channel. So this week I'll also be giving you the preparation for this upcoming week, right? What I'm doing is I'm taking you through how I prepare for the coming week. Please read my disclaimer that's appearing on the screen below, right? And take note, I want to emphasize, take note that this is not trading or investment advice. I'm not telling you where to trade or which direction to trade. So if you take the same direction as I'm going to be discussing here and the trade fails, I won't be liable to that. Yes, I'll be accountable, but I won't be liable, right? Because at the end of the day, what we are just doing, this is a probability game. So it's going to, the markets may move the directions that they wish to because I don't control them and nobody controls them. So without wasting much of our time, let's get into our preparation. So as before, we are going to start with the Euro USD, right? But we'll start with the weekly time frame, right? So what we can see here, right, is that there is a resistance zone here, right? But despite the resistance zone, we can see that there is a bullish pattern or a bullish trend that is forming. So we can see from here, right, we can see that there's been a trend that's forming, right? And it has been confirmed 1, 2, and this is the third time, right? According to the rules of trend following. Remember, trend is a friend, but don't marry it because it may reverse at any point in time, right? So what you can see is that the price first formed a lower low, right? Coming off this high, it formed a lower low. Then after forming a lower low, the price moved and formed a lower high, right? And for us, because there's been a lower high, it shows that there is a likelihood that the price, since there is a big bullish engulf here, which is signaling a great strength, a great bullish strength, we're anticipating that the price is going to break this zone, right? After breaking this zone, it will come and retest this zone before continuing to the upside, right? So this is what we'll be expecting. This is the first scenario on this chart, right? Alternatively, what's going to happen is this resistance zone is going to hold, and once it holds, it will mean that there will be the first top here and another top that will be formed to form a double top. And we know that a double top is a very powerful reversal pattern of reversal structure, right? So what we'll be expecting is, we'll be expecting that the price is going to break below this low, right? And after breaking below this low, it will pull back, right? And after it pulls back, it will close below this high, and that's when we'll be looking to take bearish position. And then the price moves, and then the price moves to the downside all the way down to this zone. Then we'll move on to the daily chart. Okay, so on the daily chart, what we can notice is the price also, remember that for our bearish, right? I'll start with our bearish. For our bearish, remember what I told you about this high and this high, right? So in the event that, there's a bearish reversal pattern that forms, the candlestick pattern now, because we already have the structure, we have the resistance zone here, right? And also we have this double top, right? So if the reversal candlestick patterns form, we'll expect the price to move to the downside, right? And if it moves to the downside, it's going to, we'll wait for it to close below this low to form a lower low, and then it will pull back, right, and close somewhere below this high. And that's when, and if it makes a lower high somewhere here, that's where we'll be expecting to take our bearish positions, and we'll anticipate that we'll expect the price to move all the way down to the zone between 1.5040 and 1.4474. Right. So this is the thesis for the bearish positions, right? But then if we look closely, there is an inverted head and shoulder pattern that's being formed. As you can see, if we check from here to here, right, and here to here, and then 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 here to here, right? And then let's show our neckline here, right? So as we can see, there is a head and shoulder pattern inverted that is developed, and this pattern signifies that the probability of the price moving to the upside is higher than the probability of the side of the price moving to the downside. So that doesn't remove the possibility of the price moving to the downside. It only adds to the probability of the price moving to the upside, right? So given this head and shoulder pattern, what we'll be expecting is, we'll be expecting the price, since it formed this bullish engulf, right, on this forming a higher low, right, we'll expect the price to break through this zone, and after breaking through this zone, if it breaks through this zone, this is too much. If it breaks through the zone, we'll expect the price to come back. We'll expect the price to come back again before it moves to the upside, right? So after retesting this, it will then move to the upside. And usually when there is a head and shoulder pattern or inverted head and shoulder pattern, we expect the movement to the upside to be approximately the distance between the neckline and the head. So it will be approximately equal to this size, right? The movement to the upside. All right. So a recap. Moving into the upcoming week, we are expecting that the price will either be a reversal pattern and the resistance zone is going to hold, and then the price will move to the downside until it retests this 1.15040 zone and 1.4474 zone, right? So we'll be expecting that the price may move to the downside here, or if it breaks out, right, we'll be expecting that the price will first break the resistance zone, right? Then after breaking the resistance zone, it will come to retest the zone. Then after retesting the zone, if it holds as a support now, then it moves to the upside. So this is the way that we'll be preparing for the coming week as far as the EURUSD is concerned. So now we'll move to our next pair, the USD ZAR, right? So as we can see from an eye test, we can see that there is a downward trend that is forming. Right, we can show it like this. So you can see that there is a downward trend forming. So as we did the last time, first touch, second touch, third touch of confirmation. So we can see that the bearish trend is forming, right? And also, if we take a closer look, we can see that there is a head and shoulder that is forming, but it's slanting, right? Which shows that it's actually following the trend, right? So just so you can see it, I'm going to draw it as we did to the last pair. Right. And right. Alright. So this is my head and shoulder and my neckline. Right. Alright. So given this, what I'm expecting is that because there is now the head and shoulder pattern, right, involved, the probability of us going to the downside is higher. And remember also that this price, this zone, it was broken, right, by this, and then it was retested twice, and this head and shoulder formed on the retest of this zone, right, which means that the probability of the price moving to the downside is actually higher, right, than the probability of moving to the upside. So if I was to assign those, so according to my strategy, if I am to assign probabilities, the probability based on the structure alone shows that the probability of the price moving to the downside is way higher, and it does not justify taking bullish positions according to my own strategy. So what I'll be expecting, because let me just remove these two so that we can see clearly. So because there is this pattern, right, this was a bearish pin bar and then inverted hammer and a bearish maribozu. So these two form, these three, they form an evening star, right? So this shows that there will be movement to the downside. So in addition to the structure, to the head and shoulder, and the formation of this low, of a lower low, lower high, right? So this was a high, higher high, lower low, lower high. Was it even a higher high? No, it wasn't a higher high. Yeah, it was a higher high, lower low. So this shows that the trend is going downward, right? So given this, I'm expecting the price to move all the way down to 15.06061, right? However, the price may reverse, right? It may reverse from here, right? And then go and breaks this and forms a higher high, a high higher than this high, right? And after it forms this high, we'll expect that the price is going to pull back, right, and form a lower high somewhere, right? So after forming a lower high, we'll expect that the price will move to the upside and go again to test this zone, right? But as I have stated, because my thesis does not justify me to take the bullish positions. So just to summarize, on the weekly chart of the USDZAR, we're expecting that the price will move to the downside all the way down to 15.06061. As I had indicated to you that it's an approximation of the height of the head and shoulder pattern. So we'll be expecting that the price will move all the way down to this zone probably, right? So we'll move on now to the daily chart. Right, on the daily chart, we'll maintain our structure, right? So see this head and shoulder, This head and shoulder pattern. This head and shoulder pattern, right? And this is our neckline, right? So as you can see now, the price is broken below the neckline, so which signifies, or which increases the probability of the head and shoulder working, right? So what we'll be expecting is that the price will continue to the downside, right? So there are two scenarios to the downside. It's either it's going to just continue all the way down until it reaches this one, 15.06061, or it may pull back, right? Since it has formed a lower low here, right? It's now trading at lower lows, and there's this high, right, that has been formed. The price will pull back, it will pull back and then close anywhere below. It will pull back and close anywhere below this high. Then after it closes anywhere below this high, then that's where the bearish pressure or bearish action takes place, and the price will move all the way down to 15.6061. Right. Then in the event of bulls, what will happen is that the price may reverse and then break this high to form a higher high. Then after forming a higher high, the price is going to move to the downside to pull back and forms a higher low, right? Then after forming this higher low, the price is going to go back all the way up and probably test 17.60092, right? So just a recap, we're expecting that it's most probable that the price will move to the downside, right? And we will be expecting that it will move up to the 15.6061 zone, right, or more, right? And because of this structure, this head and shoulder structure, right, we are saying that this has increased the probability of bearish trades, and according to my thesis, this makes me not take any bullish position, right? Remember what I've told you, that it may be different in your case. Your case may be different to my case. You may be a scalper, you may be an antagonist. I'm forgetting the proper name of those, like those that counter trenders, right? But me, I'm not a counter trender. Wherever there is a trend, I try to identify it and follow it. Just a recap, right? On our Euro USD, we're expecting either a breakout or a reversal, which means that we're anticipating either bullish or bearish pressure. Then on our USDZAR, we're only expecting bullish pressure, bearish pressure. There is strong support, that there is a higher probability of bearish positions than bullish positions, so it doesn't justify me taking my bullish positions, right? So that's just about it. Before I go, there's something that I really enjoy. I enjoy reading, and as a trader, I also encourage you to put reading into your schedule, because what it does, it develops your mind, and also it makes you realize the gap between professional traders and us developing traders, right? So the book that I've been reading for the past 3 months, it's The Daily Trading Coach by Dr. Brett Steenberger, 101 lessons for becoming your own psychologist. So I'm now on the lesson 100, and I'll be finishing lesson 101 tomorrow. So this is a very good book for your psychology, and also it also points you out on how to formulate strategies and how to develop thesis of your trades, right? Then outside trading, I've been reading also this book, Relentless Mental Toughness and Optimism. Right. So this also helps in trading because it teaches you how to develop that mental toughness. As you know, we lose more than we win in trading. Like in terms of the percentage, the win rate is very low. My win rate is around 30%, but I still manage to find something out of that 30%. So this book helps me to stay calm, even if I have a string of losses. I'm not disturbed because I know that my time will come. I'll hit my home runs. So, ladies and gentlemen, that's just about it. I want to thank you for joining me. I want to thank you for staying with me up to this hour. I hope that I'm improving because that's the main goal. The main goal of this channel and this platform is for us, you to improve, me to improve, and the quality of content and the quality of videos and stuff to improve. So I hope that we are improving. For you, the message that I leave out to you is grind the markets with grit, stay vigilant, you have relentless mental toughness, and go. Roy Machingura out.